Let me get a couple of things ready here.
US House Speaker Johnson says we're working to finish the final details on the reconciliation bill. Says we could get the deal wrapped up by Thursday night.
Mm-hmm. This one's not it. This is it. What was the other thing? Yeah. What's up, Struck? What's up, everybody? What else did I want to know? Today is what, the 6th, the 5th? What the hell's today? 6th, January 25th.
Post Holdings 2.0 billion in revenue was slightly the 1.98 consensus estimate. They're raising a full year adjusted EBITDA outlook.
One more thing. Can't find the other chart. What is this? No. Oh my God. How do I get this off? Okay. All right, 5 o'clock. How's everybody doing? Good. I'm hanging in there. Trying to get through this earnings season without getting chopped up and frustrated. But other than that, no complaints. There was one more thing I wanted to see. Hold on. Is it this here? I don't know if that's it. I don't know. That's it. Let me just lower some squawk noise so we don't get interrupted. Alright, sorry about the little delay today. I got something I had to do late afternoon, so rather than cancel, I figured just push it an hour and no harm done. Let's quickly talk about the market. We'll go through, as we always do, some of the main indicators and signals we pay attention to, what our takeaway is, and then we'll quickly talk about earnings season. My takeaway, then what you share with you guys have taken away, and kind of the good, bad, and the ugly so far. And I think while there are some issues in this market, there are definitely some things missing. At the same time, there's definitely a resiliency here that's holding things together, while other stuff have to cool off, and which they're doing. So let's just talk about the market. I think it's a good segue. We kind of into this earnings season. What we're seeing, if you guys remember, like a lot of people I talk to, me in particular, really would like to see some sort of correction, right? Your healthy run-of-the-mill correction. As a matter of fact, without a quote-unquote legit correction, I explained to you guys that in all likelihood, I'm probably not going to get too aggressive in regards to positions, overnight risk, unless sweepers tip me off to something new that isn't already overpopulated, overowned, and saturated retail at this point, right? So for me, one of those things have to occur in order for me to get excited enough to put on a basket of long exposure, especially in options, right? So what we've been seeing, and I think one of the reasons why we're not getting that normal run-of-the-mill rinse that you usually see after things do get overpopulated is we're getting like a rolling correction. And what I mean by rolling correction, you probably heard the term before. You hear it on Bloomberg or CNBC. Instead of everything highly correlated and coming down at once, right? Especially in my day, like through the 90s, the early 2000s, what used to occur is everything late in the late stage of a run, there would be a lot of participation. Obviously, there would be leadership and things that do better than everything else, but almost everything would appreciate into a strong rally in a final phase of a trend. And then you'd get a pullback, right? You get a retracement when things got a little too overheated. And during that pullback, everything would come down together in a sense. The indexes would be down, and you look across the board, all risk-on sectors would be lower. The only things that usually would buck that trend would be defensive groups. In this, especially in this bull market of late, the last couple of years, we just don't see that anymore, right? And the reason being is we're not getting that participation on the upside, right? There's not that full participation. There's pockets of participation. And so it's really difficult to get that correction, that high correlation type of correction, when you have that type of price action. And what we're getting instead, even in some of the hotter pockets of the market, and again, hotter pockets of the market, not just describing the price action, it's more of the participation factor, right? How many people are bullish? How many people are long already of whatever that may be? Instead, what we see is if a certain group gets overpopulated, you see it start to break up in pieces. And I think the Mag 7, which we spoke about, is a perfect example. Rather than the whole group kind of consolidating or pulling back together and taking the indexes down with it, you get from time to time different parts of that Mag 7 trade start to break off and march to the beat of their own drum. Right? I mean, Microsoft, which we spoke about, you got a Microsoft that's been absolute dead money for 7 months, 6-7 months, right? Where you have a Netflix that just doesn't seem to want to stop going higher, right? Or a Meta, which has been really strong, or again, you guys know what I'm explaining here. It's nothing new. We've been talking about this, and then you look after that. You can use the semis as an example, right? I mean, the semis a little more involved there because they all went into like consolidation outside of an Nvidia or an Avgo, right? It's just a couple names. But the same sense you're getting now, right? An AMD really looks like crap. But you got like an Avgo or a Marvell, which look like there's nothing wrong, right? Tesla will be ripping and going parabolic, and then that'll decide to pull back and go into a little hibernation. And my point being is, it's not led by the overall current in the market, right? It's marching to the beat of its own drum in a sense. So that's what I think makes things tricky in a sense. It's usually a good climate if you're a stock picker. Okay, because the reason why it's a good climate if you're a stock picker, you're not relying on the indexes. As a stock picker, you're concerned about that high correlation pullback, and if you're not getting it, it's a good thing. But the problem is the action hasn't really been broad enough, right, to find enough names to participate in. So what I'm getting at is the market is not giving us what a lot of us would like on the bullish or bearish side. That's usually the case. But I think positioning behind it, positioning and sentiment is a lot of the reason why. I take where we are now, right? And I think that'll be a good segue into where we stand, a good chunk of some of the big earnings behind us, okay? You got these little choppy consolidation, range bound things like this going on, right? And at the same time, what you have going on is you have retail. Okay, remember we talked about that tug-of-war at play? You got retail as bullish as you're going to see them. Some measures of retail have them as bullish as the peak of the meme craze in 2021. Okay, again, I don't know how true that is. That scared, as a contrarian, that period scared me to death, as many of you know. I don't really feel that per se, but retail is definitely bullish, right? Definitely bullish. And you don't even have to, again, it's not even just a smell test, which you can get a good measure from it just on your own, go on social media or whatever it may be. Not just that, there's actual proof of it. Goldman and JP Morgan put out numbers and readings just recently here this week. And you could say, why is that so small? Record retail army, animal spirits, YOLO behavior, largest retail buy-in balance in the history of Goldman's data set. Okay, going back to 2019. All the record buying from retail has all occurred in early 2025. The second largest retail imbalance took place on Monday, 2/3/25. So all the top numbers. 4 of the top 5 retail imbalances in our data set all took place in 2 weeks. Okay? And they've been buying the dip, right? NVIDIA, they bought the dip. They've kind of been rewarded in a sense for now, but they bought the dip pretty aggressively. Okay? And they've been buying the dip, and it's not that, a lot of people don't realize like why you pay attention to it or why it may be important. Okay? It's not that retail gets burnt every time they decide to do something. That's not the problem with retail. What retail does is they keep going back to the same trade over and over and over again with larger and larger side, thinking it's always going to work, right? And they get sloppy on the risk management side of things when it doesn't work. Guys, I've explained to you like what happened in the 90s. I get asked the question, the most popular question was, how would retail hold the whole bag all the way down from the 2000 blow up? And it's very simple. They bought every little dip in the late 90s, retail would get shaken out, right? There was a correction every 3 months, it felt like. And every correction, retail would get spooked out thinking the bubble popped and ultimately just to puke all over their screens because the stock would reverse, go to new highs and split 5-for-1, right? So that happened over and over and over again, and they actually benefited off that in the last few times. Ultimately, when it happened in 2000 again, nobody believed that correction was the end of that bull market. Everybody thought it was going to come back and go to new highs like it did the last 12 times. Right? So just so you understand, that's the problem with retail, especially when they get too big and get too crowded. It's not that retail is always wrong, and the same with any of the other positioning or sentiment we follow, right? So you got retail now buying the dips, supporting the market off any little pullback, getting aggressive. And on the flip side, you have the pro side, right? And this is that tug of war. Hedge funds, right? The institutions that are actually shorting rips. All right? So you got that tug of war here now, and both have been dancing around extremes throughout the past few weeks, meaning that, hedge funds at times would get to an extreme on the short side, and retail, as we just said, is now extreme on the buy side. Okay? If they both were on the same side at an extreme, that's usually a high quality contrarian signal, right? As a contrarian, you would love to see that when everybody's on one side of the boat, right? We talked about that. The beauty of corrections is eventually you get everybody bearish. Retail, pros, systematics are short, everything. And when that turn comes, you got a lot of fire in the tank. You got a lot of ammo when that turn finally comes, right? What we're dealing with here is you have certain pockets that are at an extreme and certain pockets aren't, right? So who takes the bait here, right? That's kind of what a lot of us contrarians are looking for. Do hedge funds, which we thought by now they would, hop on and chase, right? Or do retail get run over on one of these dip buys and end up puking up their longs? Okay? That's kind of what we're looking for here, and we're not having resolve, big picture wise. This is just retail imbalance. You can see in the blue, swarming the red. That's from Goldman. This is from JP Morgan. So, a lot of the big houses are talking about the aggressive buying of retail of recently. Okay? Here are hedge funds I'm talking about. Right? So we look at this from Sentiment Trader. We look at this every time on this webinar. And you can see, right, hedge funds have started, not in a major way yet, but they've started to add on some shorts again after covering those shorts, right? They had a point where they could have flipped long, and they did not, right? So they start shorting again. So you're getting this tug of war, and here's hedge funds kind of sector-wide, product-wide. All U.S. equities, they're short over the past week, over the past month. Macro products, slightly net short over the past week, a little more over the past month. But you can see they're not excited about anything. I keep knocking this ginger ale over. They're not excited about anything on the long side. Anything. Okay? So you can make the argument, right? If you're looking at the glass half full, you can make the argument as a bull that this is a good thing because it should keep a bid in the markets outside of some exogenous event, some credit event that knocks the shit out of everything. Okay? So that being said, again, I know there are people out there, especially some of the newer traders, that probably couldn't get a rat's ass about any of this stuff. Stonk up or down, as I get on Twitter a lot of times. What's that mean? Stonk up or down? But these things we look at, I want you guys to understand what we're looking at and what the takeaway is, right? Not just looking at these positioning graphs and sentiment graphs, what it means, what it signals to us. And that's what it signals to us, that there's a tug of war at play, and eventually is going to get resolved one side or the other. And that probably is going to be a good indication of what we see, a major move out of this market, or in a broader move out of this market, a more highly correlated move out of this market when it shows up. Okay? So that being said, I told you that's one of the things I wanted to see, right, was a healthy correction, and it's not looking good, right? The probability of that without some major catalyst that just we don't see right now. And that's the wild card, okay? Something goes boom somewhere, and that's that exogenous event that can tip one side or the other, okay? But we can't handicap that, so there's no reason to even talk about it. So outside of that, getting a correction and a healthy rinse to the magnitude that we would like, again, 10%, 15%, I'm not talking about apocalyptic. The probability of that is just not as high as we would like right now. So what I want, we're not going to get, right? So what I'm looking for now, coming out of this earnings season, is just new names, new pockets, new ideas where, the sweeper activity, which is a measure of professional buying in the option market, right, via the use of leverage, a risk appetite out there that's showing me that the money out there is finding something to take risk on. Because without that, I just, again, for me and my experience with what we look at, it's not, there's more risk than reward on overpopulated areas of the market that have already hatched. And I don't want any part of that. At this point in my career, I don't have the FOMO. I can avoid things that I know I'm probably just going to spin my wheels and get chopped up on net overall. So that's kind of where we're at and what I'm looking at as we go into earnings season, right? Anything that may resemble something new, right? Something that is not littered with call activity for the past 6 months, right? Old flow. If it's new, I'm going to participate. I'm going to play. Okay? Newish. It doesn't have to be a new name, right? Now, if it meets the standards, kind of what we talk about on this webinar all the time, right? Thinking RBRK or any high growth, good looking growth names that catch that type of aggressive sweeper activity, that's what I'm ultimately interested in, right? That's what I come to work every day hoping to see, okay? But it doesn't have to be that for me to play and participate. Okay, if there are things out there seeing even some spec buying and it's new flow, right? I feel it's not rolling activity. If at a good spot, I'm willing to play, but I'm not going to I'm not going to be aggressive, and I'm going to be cognizant of how much weight I'm holding on an overnight basis. Worried about getting caught in some sort of downdraft. Again, because the reward side of that ratio is not, it doesn't get me excited enough based off the setup I'm seeing. Okay? And that's it. That's just, I don't want to overcomplicate things. That's the only thing that is kind of holding me back from this market. Everything that's bullish, I feel we don't have much of an edge off the flow anymore. Okay, any name that you can tell me that's seeing some sort of aggressive order flow, okay, more than likely, I feel like there's not that much edge left off that flow anymore. Okay, you may differ, you may have a different opinion, but based off how I look at and how I use the sweeper activity, that's my interpretation of it, right? Anything I feel like there might be some sort of edge off of, I'm gonna trade, right? Obviously, if I feel there's an edge off the action, I'm gonna trade. I give an example. I bought 2 piece of garbage names over the last couple of days, right? So it's not like I don't want to participate or I'm not going to participate at all, right? But I bought two stocks that, again, don't meet the characteristics of a good-looking growth name. They're crap, but they're seeing new action. They're not overpopulated, right? And they're decent spots. They're not up 600,000%, and I'm looking to start a new position there, right? So that's the main issue. Now, I think once we get through this earnings season, something's going to have to give. Something's going to have to give. You understand? Either we're going to continue to see a lack of new buying elsewhere, and I think that's going to lead to some sort of pullback, may not even be 10%, but something to shake, rattle the cage a bit, or we see the buying expand and start to spill over into other groups, other things, and lead to, a strong, broader leg higher. So it's more of a gut feel than anything else, but I think something has to give as we come out of this earnings season. I think right now what we're seeing is, like you look at a name like Pins, right? Let's say, okay, and we've been seeing a lot of it, like this underbelly, right? A lot of these are post-COVID winners. A lot of these stocks have been dead for the past 2-3 years. And what you're seeing, because again, they really didn't participate much in this AI rally, and they've been laggards. So any good news, anything good, these names are getting the benefit of the doubt, right? So you got pins, and I see like people oohing and wowing on social media, pins up 6. But really, is that really a big deal? It's like back to where it was 4 months ago and then fell flat on its face. So what you're seeing is just in between trading, right? And that's more random shit to me around earnings season. Does that make sense? It's more random, right? This is roll the dice on a pins. If their numbers are decent, their guidance are decent, you probably get a decent bump off of it because the stock hasn't moved over the past 6 months, right? And you're seeing a lot of these names that have done more, I think, better than not, right? Roblox was doing good up until earnings, and then today came in a bit, right? So all these type of names, and I think that's because of a lack of new ideas out there. New ideas. I think that's the main issue. Everything has moved too, right? If you remember, like some of the conversations we've had, it's not. I don't want to make it out to be like some of these perma bears out there that is just mega cap AI related names that have rallied. That's not the case over the last year, right? Probably a year. We definitely broadened out, right? Like you had look at the financials, right? The financials, I think, have been one of the more underrated spots of the market. Nobody even talks about them. Well, now they're starting to. But the financials have been insane, right? The utility names, right? These power names have been studs. So it's not that we haven't broadened out. I think where we've broadened out, these areas too are now either overheated and saturated. You know what I mean? Like, look, have you looked at some of these major banks? Look. Nothing wrong with that. Right, but the question is again, and I don't think you get people who gas up their book on CNBC, Bloomberg, social media, right? They don't tell you where, even if they own it. Some of them probably bullshit, excuse my French, but they'll gas up a name where they own it, a year ago so much cheaper, and they're telling you to buy it up here. All right? So if you're in a Goldman Sachs and you've been riding this wave, good for you. I wouldn't sell it. But would you start a new position in Goldman Sachs up here? What's the risk reward look like in Goldman Sachs right now from here? Is it favorable? I can't make a favorable argument. Now that's not to say it can't go higher. But this is not where I want to start buying the name. I would like to see some sort of correction, digestion, at the least, if I'm going to start looking at this name now. And I think that's the main issue, right? The good stuff that is not overpopulated with bulls is just a little too hot right now. Oh yeah, good point. And earnings, no doubt. Like if you're crowded and you have a little hiccup in the quarter, you're gonna get hit over the head, right? Now again, if you have cushion in the name, okay, like whatever stock it may be, if you're up in the name and you're riding some into earnings or you're riding the position, holding it longer term, it's not the worst case scenario. It comes in a bit, of course you don't want it to, but I'm saying if you're taking that risk and holding through earnings and they happen to miss the mark and it gets hit over the head. But if you're buying up here and you're going into earnings and the name misses the mark, you're gonna get hammered. You're gonna get hammered. And that's the thing. Like, there are ways to looking at this market, right? And I don't. Everybody. There's a million different ways to skin the cat, right? As they say. If you tell me you make money a certain way, I take your word for it. Honestly, what do I give a shit? It doesn't affect me whether you're making money or not. If you tell me you're having success, more to you. Just don't push it on me because you're wasting your time. You know what I mean? But all I can tell you is like my style and the way I approach the market. I don't need to find something to buy every day. I don't. That's not my mission in this game. It's not my mission, right? Like, honestly, my ultimate goal, if I could dumb it down as easy as possible, is to come in and find good-looking growth names that are catching interest from the pros, right, in an aggressive way, and barely nobody else knows about, or nobody else is involved in. Now, right? That's ultimately my goal when it comes to my style and how I look at that thing. Outside of that, everything to me is just a trade. And just a trade, there's a lot of randomness involved. Your hit ratio is going to come down dramatically, right? You got to be more realistic about it. So, but I don't need to come in and find something to swing or build a position in. For just because, like, I'm trading my own money. I'm trading my own money. So that's how off what we talk about on these webinars and in the steam room, right? Flow, sentiment, position, the whole bowl of yarn. That's how I'm interpreting things right now. Okay, so it's nothing more than that. And as we get through earnings season, we're hoping one of the two gives, and I think it will eventually. I don't think it goes much longer. Again, other than that, there's really not a whole lot of flow to talk about. The couple names we're starting to see a little bit of flow perk up. That's just because we're getting through this week. As we get into next week, the flow becomes a lot clearer. If something gets aggressively bought and doesn't report earnings, you can rely on that action being legit, quote unquote, clean. You don't have to worry about other earnings around you and hedging for that. So just by default, the action gets cleaner. But we're seeing the majority of the clean action right now, meaning post earnings or doesn't catch earnings, is either spec action, and what we refer to spec action is cheaper, more speculative, more shorter term in nature, right? And just so you understand the difference, okay, that speculative action, and if you're in the steam room, pay attention to this so you understand, okay? Because, again, whether you believe this or not is irrelevant, but just so you understand why I may not be gassing up certain flow. The speculative action is not something necessarily that I always want to follow. You understand? I don't want to follow retail crowd buying in every name I see it in. Right? Quite the opposite. Right? So when I'm seeing weekly action or front month action or a name catching short dated action, no revenues, and looks like a pump and dump, whatever it may be, that's more the type of action I want to get in the middle of and benefit from the momentum that the jabronis may create. Make sense? Right? I don't want to rely on the riffraff cashing a ticket and being right. I want to lean off the riffraff's buying and try to make money off the momentum it creates. All right, so that's kind of the spec action in nature. The stuff that I'm more inclined to tail and rely on is more on the professional side, right? That the institutional buying. Okay, so if a fund is building a position in XYZ, and I don't mean square block XYZ, I'm just in literally XYZ. That's more, right? That's the conviction that I'm more inclined to take a size position and be patient with it, give it time, and allow it to work out. Right? Because there's that conviction there. There's that, maybe they know something we don't. Right? And not only that, the accumulation alone, if you find them early enough, you can benefit off the momentum as well. Right? But that's the stuff that's the stuff you try to rely on that they're right in a sense. The spec action, the stuff in weeklies, that's the stuff you're looking to just get in the middle of it. So when you're seeing aggressive weekly buying or whatever it may be, you don't get excited about that. That's not stuff you want to hop on the coattails of. A lot of that action is coming from schmucks like us. All right, so those are the two distinctions there. Right? A lot of the times, even that weekly spec activity, when it's coming from outside of the retail realm and more professional, a lot of times it may be just hedging. It may just be hedging or putting on exposure like into ahead of the job number tomorrow. Could be a variety of things. Doesn't mean you want to tail that. That's not stuff in the long run you're likely going to be successful and make money tailing. So, that's the difference. And to my point, we're seeing a lot of that, all right? We're seeing a lot of that. It's okay to trade and try to make some money off of, but that's it. You know what I mean? That's it. There are a few names, like, for example, today, QCOM saw some May activity. There were a couple of May call sweeps in QCOM. That looks, somewhat maybe interesting. The one thing with these names, they just reported a day ago. So there is the possibility that some of the pre-earnings stuff is getting pushed out. So we'll see what maybe OI changes look like tomorrow, if anything of size closed. But QCOM, there was some May call buying. What was the other? Uber, there was some buying in Uber today. This is a tough name to trust off any earnings flow at all. Because there's so much activity in it. But Uber was really active today on the call side. There was a Jan sweep that was decent. So again, we'll see what OI changes look like in the morning. But that's it. Very isolated action in anything of size and stuff like that. The more speculative action in some of the under-the-radar names, that's what I've been more interested in because I feel like I have a little bit of an edge of getting in the middle of. So I played this Lay's potato chips. This is some pump and dump quantum play like the others. So yesterday morning we saw some action in it. I bought equity. Today I sold half the equity. I'm going to hold the other half. Okay. I think they have some conference or some shit on the 11th. I'll try to write it out to then. And MD, this piece of garbage, they do shrooms and psychedelics or some shit like that. So this is getting a bump, I guess, off Kennedy, RFK. But again, had a nice little move over the past couple of days. There was some spec action in it. And I got some of that. I didn't sell any of this yet. I'm holding on to that. And that's it, guys. Nothing really, honestly, nothing that I'm excited about. There's one name that caught a little bit of action that I like. Very illiquid and it's just illiquid. But I got a feeling if the liquidity shows up, it's probably going to be too late to get your hands on it. Titan. So this is Service Titan. And what? Yo! What is that? Oh, shit. Is that legit? Anybody have an update on this Titan? Oh, man. Where's Alex in the room? Hold on a second. Maybe GJT would know. GJT usually knows that news. Anyway, this was a name, caught some Fed sweeper activity. Again, you guys know. Those of you on this webinar know why I like this name and setup. Okay? This is the first sweeper activity in the name. It's fairly new. And that's that. Bid-ask spread is huge, so maybe it's not a legit print. I don't see any news. This could be a wrong print. I don't know. Anyway. I see Ron Cheryl yapping away over there. Yeah. So if this is a bad print, this name is a little bit interesting because, again, post-IPO, broke its maiden, finally caught some sweeper activity, Febs, and if they come after it again, you probably get a move like we're seeing here in the after hours. But it trades, it's just thin. There's some volume there. It averages 300,000. It just came public. But it's really thin. It's really thin. What's the bid on it right now? The bid ask. It could be a wrong print. 106 is the print. Wow. Yeah, well, maybe like 50 shares went off, so who knows? Whatever, it doesn't matter. Obviously, I'll take it, but, I'm hoping there's volume there anyway. But I'm not looking to sell it regardless. All right, so if it's Fugazi, if the volume picks up, if you have an interest. This is an AI software name. So that's kind of, these $100 stocks, right, that nobody really knows yet. That's more my, you guys know, that's more my cup of tea, right? So again, for the record, this is not a micro cap. This is not a pump and dump quantum play, right? I like trading those, but those aren't names, I necessarily get all giddy to hold longer term for, unless they have somewhat real growth in numbers. Like ideally, again, this right, RBRK, the new Pelosi name, like those are the type of names generally I want to see the sweeper activity in. Because what I look to do with the majority of these things, I'll buy some, and if and when they go, I'll sell, and I always leave a piece behind, right? Because the growth is there. You never know. You never know what they turn into. The numbers are there. Now, the pump and dumps, you never know. If you own them cheap enough, you can get a big enough pump over the years, right? AKA soon, right? But like for me, you want to sell the pump before you get the air coming out of the balloon dump, right? Because there's no fundamentals. It's all story, right? One of these may become real, but you never know who it's going to be. Look at all the EV players, right? I keep using that as a recent example, right? Lucid, Rivian, how many? There were a gazillion of them, A lot of people thought like Rivian, oh, that's going to be one of the, or Lucid, that's going to be one of the real ones. You know, they had no, their fundamentals were awful. Awful. I mean, some of them they were buying had zero revenues. Some of these AI quantum names had no revenues. So, last print 20 shares. See, 20 shares? I wasn't even being exaggerated there. It's really thin. Like the T-TAM we're talking about. Like I try to buy it. When I try to buy it, ended up getting filled on 1,200 shares. I thought the thing was going to rip $20 in my face. It was pretty liquid. Now you could roll the dice and buy some calls with a little time and put in, try to make a score type of thing. You can approach it that way. The problem, I think, is once it becomes liquid, it might be gone. You understand? Yeah, Tuya. This is Ranchero, earmuffs, cover your ears. This is a China AI name. This was probably the best, quote unquote, unusual activity, spec activity out there today. Tuya. It's a China software play. It was really active. Really active. They did go out in time, though. I think they went out like June, September in the call buying. So they bought it with some time. Wasn't, cheap action, but it was okay. So this was the top unusual spec activity today. Oh, that name, this name. You guys know this name. I know you STEAMROOM members. We spoke about this already. But I don't know some of you others on who come to the webinar here. You guys have mentioned this name a lot. This BBI. What an explosion here. So this is what, honestly, guys, this is what I've been more focused on just because there's been a lack of new ideas elsewhere. Flow-wise. I'm talking flow-wise. Hawk to you. I like that. I'm going to start using that, Shank, for that stock. Hawk to you. And that's it, guys. That's it. Some of the sentiment stuff that came out this week looks okay. You had some cooling off here in AAAI. So that's not that hot anymore. That's kind of your, a lot of people call it retail investing, but it's longer term players, not retail traders, not option players. All right. So they're more of a longer, intermediate term, longer term perspective. I see a tug of war, and that's what we're kind of seeing in the price action. To tell you the truth, I think it's resulting in the price action, right? It's resulting in the price action. And McElliott came out with a note yesterday that, the longer this goes on, the more it ends up feeding in itself. You get vol coming in, you get gamma increasing, and you get this sticky price action, right? So all these things, especially in the market this day and age, it just ends up feeding into itself till it gets to an extreme, and then you get a little bit of an unwind, What else? Bitcoin. Same shit, right? Same shit. You got filled on T10? Yeah, I got 1,200 shares total of T10. That's all I got filled on T10. But not today, Sahil. What was it? A week ago? When Shank probably knows the exactly what day that was. The day caught flow. The day caught flow. Oh, good call, Patrick. Again, not a new name, but this has been a really nice name, KC. Really nice name. You see what I mean, though, Patrick? Though, look. Okay, Here, you got real estate. You got room to run. Me personally, though, Patrick, again, it's a preference thing, but at the same time, it's off experience because I haven't been able to be consistent playing and chasing that way. This is like I can't do anything with this here. I can't do anything here with this. But I'm bad to refer to about this because I don't like to revisit. I don't like to revisit. Yeah, it's a crazy move, this KC. Look at it. Yeah. And now, if I remember correctly, it caught action over here. It was in December. So you had this move and you had a little bit of digestion. Then you had this move, a little bit of digestion, and now you just got straight rip. Like you kind of need January 29th. There you go. Thank you, Shank. Is this China too? This is China? I didn't know that. I didn't know Casey was China. So this is China too. But yeah, the flow in it has been, the sweeps aren't too bad at this Casey. They're good looking sweeps. Smaller, but they're good looking. Not quote unquote speculative, if you know what I mean. Again, all the other stuff that you guys are rooting on, they just hatched. That's all. They just hatched. All the power names, the utility names, they've had incredible moves here. Look at this Aklo. Look at, you guys see this? They're squeezing them. They're in the midst of another squeeze here, Aklo. Right? I mean, some of the other ones have been a little quiet now. SMR, right? They're kind of digesting. And then yeah, see? They're kind of breathing. Aklo's in the midst of another squeeze. Yeah, so you're seeing, again, that rolling correction. It's unbelievable how they do it. So if you look, let's take the market now as a whole, right? Let's go sector by sector, and we'll start with the worst, kind of, right? You got this materials that really nobody wants anything to do with. Okay? The one group nobody wants anything to do with. This already had a correction. Okay? This already corrected. Now, I don't know, maybe it ends up going lower, but I'm saying it's not like this needs to correct. There's already been a correction in materials. Right? Utilities as a whole, this has been dead money. Right? Dead money. This is not going parabolic. This is not overheated. Okay? What's some of the other groups? XLP, staples, or consumer staples? Huh? This is a correction in my book. Right? This is a correction here. Okay? Whoever is bullish here is not going to be bullish anymore there. Okay? You got rid of all the bulls. So that has corrected. XLY, consumer discretionary. Huh? This thing's not ripping and roaring. Some nice digestion here. Right? So you're thinking, it must be tech. Right? Does that look like it's ripping and roaring? Right? Look at this menagerie here. Since the election. Okay? Oh, maybe it's small caps, right? It's got to be small caps. Nope. So without even really feeling much, you got under the hood some groups that are well within a correction, some groups that already are in the midst of some digestion, possibly a correction. Right? Again, semis, we know what the semis are doing. They're not doing jack diddly. Squat. Look at this, dead money. Okay? So, and just so you understand where I'm coming from, you understand? And the only proof I'm going to have is from sweeper activity, right? Especially newer sweeper activity. If I don't have what signals I have conviction in tipping me off of this coming to an end, right? I don't want to be in it ahead of it, especially via options, because I don't know when it's going to end. How do I know? Based off of what? What they're saying on social media? Right? How do I know that this doesn't resolve in a leg down than in a leg up that everybody thinks? You understand what I mean? So that's the issue at play. That's the issue at play. I don't have the faith in my own skills because I know that I can't figure it out. I'm not going to be able to predict it. So what does this become? This becomes trades, right? Like, if you ask me based off what we're seeing, signal-wise, sweeper-wise, these are trades. You buy when they're down and they see some sweeper activity, and you sell the rip. Easier said than done, but that's how you approach this. If you have to play this or sweeper activity, that's how you approach it. But you can see there, basically it's almost everything very similar. So you got these smaller pockets that are fundamental, that are seeing the growth of AI and showing it, that are doing well. And now you got earnings season, so now you're not going to catch that move unless you take the risk through earnings. Right? Like the majority of these big moves are being generated off of earnings. So you take that risk, right? There's a lot more risk. The names that are doing well are getting rewarded. Like a few of you pointed out, the names who aren't are getting hit over that. That's what's going on. So now, to sum it all up, guys, and I know this probably sounds ridiculous. I don't even mind all this. I actually prefer this, to tell you the truth. All this in the backdrop. As long as we're finding new ideas under the hood. You understand? I'd rather the setup be like this. Because in reality, the market probably will remain capped. You understand? The market may stay range bound in a sense. But under the hood, if there's new action, all the opportunities are there to find alpha. But without that, you can see how it can be a problem. So that's the story. Oh yeah, banks have had. Oh, banks. We didn't look at banks. I forgot. Banks are the one, right? So the banks are the outlier. And prior to earnings season, you got a little nice little breather here. Look here. But now you're back up here again now, right? You're back up there now again. You know what? We talked about this. It's not sexy though. This is probably a place of opportunity. Who's going to get excited? Any of you going to get excited? And there's flow in some of these names, but there's no Waklo. You understand? You're not catching moves like that. A couple of you mentioned Schwab. Schwab has been really good. Schwab has been. You can't complain about Schwab. You're not going to get much better than that out of Schwab. What's some of the others? Like CMA, I think was a symbol. There was some nice action in. So if this is your cup of tea, and you're in the room, look for flow at decent spots and these things. But just understand they're slow. They're slow. They're really slow. Yeah, software. Software positioning wise, software is still not, believe it or not, still not loaded tank wise, all in. Still has room as a group. But what you're seeing is because some got hotter than others, it's not full participation within the group in a sense, because some things got really overheated and some laggards catching up, right? But that old group, you had like CRM, right? So like look at this. You had a great move there. Now you're gonna have a little digestion would make sense. So that again, Sahil, that's why I'm hoping that we get more names like this. You understand? Because that's where the money's going to be. Right? That's where you get names like this. You're talking about like these guys when they were in play. MDB. You get some of the biggest winners. And now AI software, forget it. But when these things catch initial activity, these software names, there's nothing better. There's nothing better. APP, right? Right, the PLTR, like here. Like, what the hell are we going to do with this now? And again, everybody, all you guys who are in PLTR, you deserve this if you've been holding this longer term. The fundamentals caught up. It went profitable. Everything you could have asked for in PLTR happened. But to buy it here now is, in my opinion, loony on a risk reward side of things. Yeah, Honeywell. A couple people in the room like this name longer term. Stace, this is just these names. I'll play them at times, but I don't get excited about this stuff. I don't get excited about older names that are seeing rotation. Like my bread and butter, right? My little niche, in a sense, is trying to finding this off initial sweeper activity. Even though there's no shot in hell I'm ever going to hold it and catch a move like this. But, that's where these are the type of things I think there's a real sharp edge out of the flow off of. Because when they're sweeping APP, that first batch of sweeper activity that comes into a name like APP, I mean, that's as sweet as a spot as you're going to find off sweeper activity. You understand? You're getting in literally right when institutions are picking up on that growth name. Right? There's no better sweet spot. Like Honeywell, is a name that's been around for forever, right? Funds own it. They sell it. They put it back on. It's so many hands in there. So you kind of need like a bull market in the whole group to really find that type of momentum in a name like this. Or news, right? You need something out of the norm in a sense, not just regular buying. But yeah, you got Elliott. I think Elliott's in the Honeywell, so that could be a plus longer term. But that to really have an edge, you need to see them come in and tattoo this thing, like literally tattoo it sweeper wise, to have the type of edge that I'm referring to. 4-year, what? 4-year cup and handle. 4-year cup and handle. Yeah. Well, you're talking about this now, right? Yeah. I mean, maybe. It's Honeywell. Yeah. It's Honeywell. GitLab. I like that one, Sahil. That's seen some action. This GitLab. That's not a bad name. This GitLab. This GitLab is not a bad name. We've seen a little bit of flow in it in GitLab, right? There's been some flow in it, but I like it. I like it. You got earnings coming up, I'm sure, though, right? In end of the month or next month soon. There's been some big winners too. Like, look at Net. Oh, they reported, right? What they end up doing today? What? Oh man! Wow! What? Fucking Net. Yeah, I like this Net, but now your nose is bleeding here. They got that. I've been telling you guys that Google CEO. Keep forgetting her name, but CFO. I'm sorry. Op fee. Was that still red hot? Oh my god. Oh my god. Crazy. Oh, wow. See, and look at the volume of trades now. 2.5 million shares. The numbers, right? You got a profitable company, insane growth. This is the goods. When the street notices this is what you get. And if I'm not mistaken, I think they lend Sahil to newer AI companies or something like that, right? Like startup AI loan shark, Shylock. Which one, Shank? MU? Micron? Oh, NU. Yeah, I know this one. NU. This is a fintech, right? Yep. This I think is a good company too. GJT knows it, right? Where'd they buy? They bought this dip, or was it back here? Oh no, here, right? Oh yeah, that's last year. I think here they bought some longer term flow, or was it here? I don't know. One of these places. But yeah, this NU, we know this name is all last year they were buying it. I think it's a fintech name. They loan to retail too, the op fee. Wow. Yeah, this is I remember that action too. I remember it. I didn't want to chase this. I think it was at 11, right? Right here? Probably. Don't tell me lower than that, because then I'll be sick. I got shares trimmed already. Well, what's better than that? Right? Nothing better than that. Now you could just leave that alone and get your pom-poms out. Right? Get your pom-poms out. So that's it, guys. That's it. Right? That Pelosi we talked about. I mean, quite a few times. TEM. I think if you made money with it, you want to, you're selling it. I would leave a piece of something. I would leave a piece longer term. When we saw it, $9. Oh my God, Sahil. $9. So it was here. Oh my God. Straight line, man. Yeah, if you're in options and TM, roll. Exactly. Roll. But if you're in equity, I would definitely leave a piece. The TEM I got, I have what I bought and was underwater on, and I'm just holding it. I'm not trading it. I'm not doing anything. I'm just leaving it alone. Again, I wanted to add, like a lot of you, when it came in, and just kind of lost interest in it with the market, right? And then Pelosi came out with the news, bing, 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 and that's it. But even this op fee, I would definitely leave a piece, CEO. I would definitely leave a piece. All right. Anybody have any questions? Oh, and the other thing that kind of may be indicating that this market's a little more choppy than, bull run, broadness, that type of thing, is credit spreads. Again, they're really tight. So you can't make really a bearish argument. If anything, I told you what people who follow the credit signals are saying that the market may be too complacent. That if there is some sort of wild card that enters the mix, you could see the market upset because the credit markets are too complacent. But from what we're seeing now, outside of the unknown, the signal from a lot of these spreads and swaps is a more choppy environment than anything else. Let me show you what they look like. So you're really not getting the confirmation, risk on confirmation at a credit. Sometimes you can get that early. If you remember, before the election, even before the election, you can see it here. Look, right? So like you could see before the I went too far back here. Okay, this is the beginning of October, and if you remember, the markets were choppy, literally all the way up to the election. But look at what spreads started to do. Right? So you're kind of getting that risk on signal from the credit markets, even while most people, including myself, were, unsure about what may happen during the election. And now, right, you kind of just, again, there's not really much of a divergence, but it's just not signaling anything. Kind of moving with equities in a sense. Just moving with equities. So no real takeaway from there. Sharpies, I know a lot of you guys asked me about Sharpies. Sharpies are net hedged overall. You break it up, I think they're long the Dow, they're short the NASDAQ. I think they're short small caps. So net, they still have some hedges on Sharpies. So not really much of any signal there at all. You're not going to get a long signal unless you get some sort of pullback from Sharpies, more than likely. And that's it, guys. CTAs are in buy mode. All right. Flat tape. Oh no, sellers coming into the 1.4 billion out of the U.S. Up tape out of the U.S. Wait, CTAs are sellers, huh? Wow. Oh, you know what I want to show you guys too? What may come into play here may be interesting. A little seasonality. The second February could get a little tricky as February moves on here. Let me show you. The second half. And the reason, guys, again, the reason why I'm showing you is this is where a lot of the best entries you're going to find are probably going to come from. God forbid we see any good looking flow at these spots. That would be ideal. So here, after Valentine's Day, right, you get a little wonkiness. And I think the third year. Anyway, the presidential cycle, blah, 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 blah. This year tends to be a little choppier in certain months as a whole. Okay? And for those of you who are extremely tactical, before we close up shop, here's some of the short-term signals that we look at. Right? So ideally, these here are the quality entries. One late last year, one the beginning of the year, one mid-January. This recent dip, we got close. And we're foxing around in no man's land here. Higher lows, VIX. Yeah. Well, these, I think what he's referring to, Shink, is this, right? So you kind of have where, and that may be the case this year. Again, we've seen a lot of the good side out of the Trump presidency. We haven't seen up until recently the more volatile part of it. People forget, like the last Trump term wasn't all straight up roses. As you guys see, there's tape bombs, there's trade war, there's not to mention that we had COVID the last time. But this kind of, to what you're pointing out, these higher lows, it might be something that sticks with us. When vol gets cheap, you get, you're going to get that interest. You're going to get that interest. As you go further and further without a correction, you're going to get, players are going to have that concern protecting against some sort of calamity. So to your point, this is nothing new here, right? This is nothing new. But the other side, the takeaway is you've seen sellers on the other side. So, these are things even more so, when some of these short-term signals start to heat up, you really got to be cognizant of that, right? You really got to pay attention. So when this thing gets up into that, above that 60 range, right? Our tactical sentiment, when it gets into the red or near the red, these are reminders. The squeezometer up into the 60s. A lot of these things are just, that's what they are, reminders that, something like this can be coming, a pop, and that quick rinse. So that may be something that lasts. And just quickly, to your point, Dimitri, that's like, if I'm not seeing the action, the new buying and new names to beat that dead horse one more time, that's why I'm so reluctant to put on any weight in existing stuff and get caught. You understand? The last thing, one main thing that I would jump off a bridge if I let it happen to me, okay, would be get caught off repeat activity in a basket of names into some sort of pullback or correction, right? If I ever allow that right now, I would beat the hell out of myself. You understand? Like that's a no-no for me. I can't. That's the last thing I could allow happen to myself now. Right? Because that would be all FOMO that made that happen. Right? I got no business getting aggressive and building a basket of repeat names that already hatched off repeat action. At this point in my career, doing this with this shit this long, that would be breaking a pretty important cardinal rule. And that's been my seatbelt in a sense. Yes, I miss out on some upside on things, of course, but I'm okay with that because it's prevented me from getting caught in some of the most vicious pullbacks. And if you're getting caught chasing names, repeat names after they already hatched, and you get caught in something like that with all that air underneath from those, because they've all run huge, even if they're consolidating the last couple of weeks, right? You have a lot of supply that can come out of that stuff. That's how you take big hickeys. That's how you take big hickeys. So that's like at the beginning of the webinar, Dimitri, that's kind of the point I was making, why I'm not excited to get long in any big way, aggressive way. I'm willing to participate, right? At some spots more than others, off some action a little more than others, but unless I see aggressive buying in new names or we get a correction, I'm going to tread lightly. And if you ask why would it change if I see aggressive buying in new names? Because one, that's telling me that the risk appetite out there is still willing to put new money at risk, and whether it's because not that they don't believe the market may digest or correct, but if they're new names, underbelly names, they can buck the trend. Like the example I point out to you guys when the NASDAQ bubble blew. Okay, in 2000, the NASDAQ bubble blew, but for me, the type of names, the type of stuff I look for, those were the best years of my career. Because it was all underbelly names that were getting the interest. All the crowded tech names were either chopped or getting hit over the head. Right? But underneath the hood, there were bull markets all over the place. So it didn't matter to me what the market was doing or the crowded names were doing, because there was a ton of alpha to be made in all these new names. Again, Andrew, it depends. It's not a black and white answer that I can give you. And that's what I think a lot of people who, try to use the flow initially, they look for that black and white answer. It's not. The flow, especially if you're new to it, they're puzzle pieces you got to put together. It's not, oh, it's a sweep, let me buy it. You understand? It's a type of buying and a type of edge off sweeps that I'm generally looking for. Right? Sweeps are just the type of order I'm looking at. Right? So that's the large pile that I'm picking from throughout the day, looking for that edge. Right? But like I explained to you guys early, there's sweeper activity that the last thing I want to do is rely on it working out and being right. When retail's coming in a big way and buying something, you're going to get sweeper activity, especially from the market maker side, okay? That's not action that I want to hold the bag in. That's action I want to get in the middle of, make my money off the jabronis, and call it a day. I think that's the biggest misnomer out there, is that people look at the flow and the volume in the option market and they think because they see bull betting or they see high volume that it's something special. Right? But if you're a true contrarian at heart, you know what I'm talking about. That's not always a bullish thing. You know what I mean? When NVIDIA breaks the record for call buying in a day, to me, that's not bullish. If anything, that's bearish. Right? Why would I want to be a part of the crowd? Why would I think the crowd is bullish in any way in this market? So I think it's for a lot of people out there, especially these newer traders who are using flow, they're clueless. They have no idea. And I'm not being demeaning. they don't know. I mean, they're in, they've been in bull market mode, and you get away with a lot more in bull market mode. But what's going to happen to them is they're going to chase the crowd just one more time, and the market's going to catch them and knock the living shit out of them. It only takes that one time. Right? So the way they play, they can make money this time, they can make money next time, they can make money the time after that. But that one time after that, when they get caught in a big way because they've had success the last three times prior, they're going to get lumped up bigly. And I promise you, that action that they tail, the one they get lumped up in, will probably be the most quote-unquote volume or buying they've ever seen. So to make it simple, again, Andrew, it's what I'm looking for clues out of the flow before all that comes into the market. And then ideally, I want to be holding a runner, or if you're in options like Ranchero saying, rolling when that crowd has come into play. Well, I think you even said it better, Andrew. That's basically the difference, right? So the flow that is made up from retail, in a sense, that stuff I want to get in the middle of, try to take advantage of that, make money and get out, right? The institutional side of the flow, that's the stuff that I have a lot more conviction, patience in allowing to work out. Does that make sense? I think you said it even better yourself there. Right? So what you're saying is what the flow is just basically buying and selling of puts and calls and combination plays in the option market. That's what the flow is. Right? So being the ability to be able to determine as best as possible which is which, right? To the example you're making, that's where the edge lies. Yeah, Tobias, this market sets us up all the time, It sets us up. It sets us up. But, to the point you're making, Andrew, like when you hear people saying the most call buying ever, the highest call volume ever, just so you understand, that's bearish to me. That's never bullish to me. Never. The names that I point out, right? So I'll give you an example. This name that Sahil played, okay? At $9, we saw the first buying or signs of buying that ever came into the name. Now that's a drastic difference than the most call buying ever that people are pointing out, right? The first signs of aggressive call buying ever in the name is why this name was pointed out at $9. Right? Now this thing may go to $30. And at $30, you see all the riffraff on social media ranting and raving about unusual call activity at $30, right? So just so you know, at that point, me and a lot of STEAMROOM members, I know I'm not going to be impressed, but they shouldn't be impressed by that because that's not bullish. Right? The semis, where that circle is where every semi at that point was getting bombed with call activity, nonstop. NVIDIA was probably catching a sweep, $1 million sweep every 30 seconds, it felt like. That's not bullish. So that's the difference. All right. What else? Anybody for the usually institution when you see be buying 100,000 call blocks on the same strength? Yeah, we don't pay attention to blocks at all, Fedora, at all. And the reason being is that a lot of them are negotiated in price in nature. You understand? A lot of them are negotiated and tied to other things, right? Now, maybe they're tied to another block of calls and it makes up a call spread, right? That can make it bullish. But in general, more than not, blocks are tied to something. You understand? They're not an aggressive stress of urgency. So not to say I'm not looking at blocks, because I am looking at call spreads. I am looking at things like risk reversals. But call sweepers, sweepers are my bag. Like that's what tips me off to potential institutional buying showing up in a name that nobody is aware of. Yeah, and that's it, right? See, here, that's kind of, again, not to make it too simple, but you see a name, like Sahil's pointing out, you see a name like you know the story of, right? And it sounds sexy to you. You like the business, right? You like what they're doing, and then you look at the fundamentals, and they're profitable, and they got explosive growth. And now you're getting signs of sweeper activity. You understand? So what that tells you is what you see and is appealing to you. Now it caught the eyes of Wall Street as well. And when institutions build positions, they don't do it in weeklies. They're not getting in and out, right? So in a name like this, when they're building positions, they're saying, all right, you know what? We like the numbers. We'll build the positions. Start buying the stock in the range of $8 to $15. The range the institution is starting a position within is a range where you can trade, sell it, and leave a runner. Right? So that's the difference. The other type of flow, they're in and out of, right? When they're sweeping Tesla weeklies, they're not even holding them hours later. A lot of times. So it's a big difference in action. But again, like I said, the other type of action, intraday especially, you can make money, get in the middle at certain spots. All right, guys. I think I'm out of saliva at this point. But like I said, always a pleasure talking shop with all you guys, especially on Thursday. The Steam Room, we always offer some sort of special, but you can hit up Mario. He's lurking in here. If you have any interest in giving us a shot, some sort of trial or something like that. But again, yeah, Thursdays are open to everybody. We talk a little bit about what we do week to week. And like I said, next week the flow should clear up, whether it's in a good or bad way, bullish or bearish, I don't know. But the skies will start clearing, and hopefully we got some more action and names to talk about. All right, yep. Have a good night, everybody. Enjoy the weekend. Steam Room members, I'll see you mañana. Later, everybody.